What if the California housing market isn't as stable as the headlines want you to believe? What if, beneath the glossy averages and upbeat projections, there's a slow-moving crisis already underway, one that could quietly erase home equity, trap over-leveraged buyers, and rattle entire communities before most people even realize what's happening? The truth is, subtle shifts are already rippling through parts of California's real estate market. And if history has taught us anything, especially from the mid-2000s housing meltdown, it's that these early cracks often appear in specific cities first, before spreading statewide. This time, though, the change isn't a sudden crash. It's a slow grind, one that gives anyone paying attention a rare chance to act before the damage becomes irreversible. Right now, the California Association of Realtors is still projecting a 4.6% increase in the statewide median home price for 2025, pushing it just over $900,000. On the surface, that sounds like good news. But averages are dangerous. They hide the truth. They mask what's really going on in struggling markets where inventory is piling up, sales are stalling, and prices are quietly slipping month after month. In some California cities, the warning lights are already flashing bright red. If you own property in these areas, or you're thinking about buying, the next few minutes might be the most important real estate conversation you hear all year. Today, we're walking through 10 California cities where the early stages of a housing correction, and in some cases, something far worse, are already underway. 1. Stockton, the Bay Area's pandemic spillover, now in reverse for years. Stockton was a relief valve for Bay Area buyers looking for affordability. Pandemic-era migration pushed prices to unsustainable highs. But that tide has turned. Prices here have already dropped more than 5% from recent peaks, pulling the median down to around $420,000. Inventory? Up 70% compared to last year. Homes that used to sell in 3 weeks now linger for over 2 months. Even more troubling, foreclosure filings have tripled since 2022. We're not at Great Recession levels yet, but the trajectory is unmistakable. Sellers are slashing prices. A house once listed for $450,000 is now sitting at $380,000. With no offers. 2. Bakersfield, foreclosure capital in the making. Bakersfield now has one of the highest foreclosure rates in the nation for a metro of its size. In May 2025, there was one foreclosure filing for every 1,990 housing units. This is a city heavily tied to oil and agriculture, both industries facing long-term uncertainty. Pandemic-era buyers saw their home values rise rapidly, but that artificial boost has vanished. A home that sold for $350,000 just 3 years ago is now struggling to get $280,000. And with inventory swelling, the downward pressure is only intensifying. 3. Riverside, the inland empire feels the strain. Riverside became the inland escape for those priced out of coastal markets. But many stretched themselves financially to get in. Now, with mortgage rates above 6.5% and economic uncertainty building, more homeowners are falling behind. Foreclosures are creeping up. Construction is slowing. Retail vacancies are ticking higher. The once booming ecosystem tied to housing demand is starting to weaken. 4. Los Angeles County, inventory flood meets layoffs in LA County. The story isn't just about sky-high home prices, still averaging above $800,000. The real danger is the flood of inventory now hitting the market as demand cools. In Palmdale and Lancaster, homes once listed at $600,000 are sitting at $520,000 without offers. Layoffs in entertainment, tech, and finance, industries that have long supported LA's housing market, are adding even more pressure. 5. Orange County, luxury market loses its shine. Orange County was expected to be more resilient than most places. But cracks are appearing here too. Active listings have nearly doubled since January, from around 2,500 to more than 5,100. High-end buyers are hesitating, spooked by stock market volatility and slower economic growth. Even multi-million-dollar homes that sparked bidding wars in 2021 are now sitting for months without serious offers. When the luxury segment starts to stall, it's often a sign of deeper statewide trouble. 6. San Diego County affordability hits a wall. San Diego's pandemic-era boom was fueled by remote workers, military families, and biotech employees. But with median prices still over $900,000 and wages far behind, affordability has collapsed. Inventory is rising fast. Sellers are making multiple price cuts just to draw interest. That's a stark reversal for a market that once had buyers lining up before homes even hit the MLS 7. Modesto. Pandemic boom goes bust. Modesto's economy leans heavily on agriculture and logistics. The pandemic brought a surge of coastal buyers, pushing prices way beyond what the local job market could support. Now, that demand wave is gone. A home that sold for $450,000 a few years ago is now stuck at $380,000. Buyers are in no rush. They're waiting for the next drop. 8. Fresno. Affordability advantage disappears like Modesto. Fresno once offered a cost advantage. That's fading fast. Without the steady flow of coastal buyers, and with mortgage rates higher, prices are drifting back toward what local incomes can actually sustain. The pandemic-era buying frenzy is over. And with job growth slowing, the adjustment may still be in its early stages. 9. Vallejo. Bay Area alternative. No more Vallejo was once the affordable Bay Area choice for those locked out of San Francisco and Oakland. But now, tech layoffs are hitting hard. Defaults are rising. Inventory is building fast, and prices are slipping in response. 10. Antioch. The perfect storm. Antioch faces high prices, long commutes, expensive gas, and rising bridge tolls. Median prices still over $600,000. Many buyers are asking, is it really worth it? The hesitation is showing in the numbers. Slower sales, growing listings, and more price cuts. The bigger picture: these 10 cities represent millions of people and hundreds of billions in real estate value. In just the first half of 2025, California saw nearly 15,000 foreclosure starts, one of the highest counts in the nation. Statewide inventory is up sharply from last year. And while the median price still shows modest growth, the reality on the ground in distressed markets is very different. What this means for buyers' patience could be your biggest ally right now. In vulnerable markets, the trend is still downward. Jumping in too soon could mean overpaying and watching your home's value fall before you've even unpacked. What this means for homeowners: if you bought at the peak, the window to sell without taking a loss may be closing. Waiting too long could mean joining the wave of price cutters competing for fewer and fewer qualified buyers. This means for investors, the easy appreciation game is over. Cash flow is harder to find, and buying into a falling market without a long-term plan is risky. Why California matters to the rest of the country. Forces driving these declines: higher interest rates, stretched affordability, swelling inventory, and economic uncertainty are national. But California's extreme pandemic surge means it's now an early warning system for what could spread elsewhere. We've seen this movie before. In the mid-2000s, it started with a few struggling markets. A bump in foreclosures, sellers making price cuts. Then the wave grew. This time, the process is slower, which means the people paying attention have a unique chance to act before the crowd. The bottom: Lynn didn't get blinded by statewide averages. Real estate is local, and in these 10 California cities, the story is already changing. If you move based only on the broad headlines you could miss the bigger picture and pay the price. This ISO essay, breaking down the real forces shaping our economy. If you found this breakdown valuable, subscribe and share it with someone who needs to hear it. Stay sharp, stay informed. And remember, in real estate, the smartest moves are made before the rest of the crowd sees the storm coming.